WeAreDenver. This is Nothing Explained with Sampson.
Hey, what's up? We're back and I'm excited. Woo! This is going to be a good show. This is Nothing Explained. My name is Sampson, and over the course of this next podcast, I will explain absolutely nothing. As a consequence of that, I am not responsible for anything that comes out of my mouth.
Zero liability.
It's nothing. I do not offer medical advice, legal advice, or in this case, financial advice. We're talking about alternative currencies today. It's Bitcoin, the blockchain. Wow, where'd that come from? Bitcoin, blockchain, and cryptocurrencies, and basically the future of the world, in my opinion. But what is my opinion worth?
Nothing.
Absolutely nothing. Joining me as usual, Ryan Fu.
Hey there.
And our guest, I'm really excited to bring on Raine Revere, who is a programmer working on the Ethereum network. So welcome. Wow. Thank you.
Yes. It's wonderful to be here.
How's your day going, Raine?
Oh, it's going great. It's a nice Sunday. Relaxed. Yeah.
What's your Sunday been spent doing so far?
Coding for about 3 hours and then gardening.
I imagine
you have a garden?
Coding and gardening. No, my office has a garden.
Oh,
and
even
I just
better,
like
though.
gardening
Even
enough
better.
that I will go to the office and sort of secretly garden when no one's there on the weekend.
That's good.
That's kind of we didn't ask your guest today, but certainly the type of person who probably would have a garden somewhere. In
Franklin
his
is
sphere of
a
influence.
gardening spirit.
But that has been something that we have not insisted of our guests, but somehow everyone who's been on our show
Has been
had
a gardener. Yeah.
So good for us.
Good for the planet.
I have a garden. We're at 20%. So
At 20%. I'm helping to manage a garden, and it's that first hurdle that's the hardest. Like we turned all the soil, which you aren't supposed to do, but planted a few flowers and then needed more manure and needed more perlite, and oh god, didn't quite get there. We're at like 15.
right on.
Yeah, but once you get over that hump, once you get the garden going, it's just about really watering
And weeding.
pest control, weeding. Yeah.
Management of death. All right. So let's get into it. Yeah.
Yeah. So cryptocurrency.
Yeah. So we're going to start with Bitcoin just because it's what everyone knows. It's the word that people knows, but it's actually it is the thing it is a blockchain example, and the technology is actually blockchain, and that's what's going to, in my opinion, I'm sure yours too, change the world, right? Mm-hmm. You think so? Mm-hmm. Okay, so in our little email back and forth prep, you said, I'm always looking for that way of explaining Bitcoin to the layman or whatever, and I have a good example I want to start with, but let's let you give it a shot.
I'm the layman.
Yeah.
So translate for me.
Yes. Well, like I told Sampson, I've probably attempted to define blockchain, what the technology is, maybe 100 times, and I've failed every time.
Okay.
That's a given, but I think I've gotten closer and closer to something.
Is it because it's so complicated or so nuanced?
It's new.
Yeah.
It's new.
It's
I mean,
definitely-
imagine trying to explain the internet in 1980.
Yeah, that would have been impossible.
People would be like, well, that's
Unle-
cool.
yeah.
I don't know what we would use it for, but...
Right, unless you were the military, in which case you probably have a sense of it, but otherwise.
Well, high in the military, maybe, technical aspects
really
of the
high.
military. But.
Yeah.
Yes. Well, Bitcoin and blockchain comes from some fairly avant-garde cryptographers, so I'd be willing to bet that the military and the government weren't the first ones on this one.
Oh, good.
Yes.
Yeah,
That's the best stuff.
Yeah.
All right, we'll give it a shot for us. Let's explain Bitcoin what is a cryptocurrency?
Okay, so Bitcoin is a digital currency, but that's actually not what's special about it, right? You can send money online, PayPal, Venmo. Digital money's not hard, but digital money that doesn't rely on a trusted third party.
And who is usually that third party? Like in regular money?
Well, in regular money, or what we call fiat currency, it's the banks.
Gotcha.
When you cash a check, it takes 3 days to clear. It's the bank doing its job.
Yeah, for us, that's the Federal Reserve Network.
And, well, the Federal Reserve is actually minting U.S. dollars, right? So they're managing different aspects, but they also have the power to actually create new money.
And I think it's good to point out that the vast, vast majority of money being minted by the Federal Reserve is actually digital, so it's not really being minted.
Right.
So when you think of money, you're thinking of a thing that you have, but honestly,
it's an idea.
Something like 85% of all currency is a digital thing.
Because how else could it not be?
Only. Yeah.
Like if you're a business trading in billions of dollars, you can't go and pick up $1 billion in paper cash. That wastes more money.
Yeah.
Right. Yeah, you wouldn't want to do that. we think of money as something physical, but you're right. It's even fiat currency is not so physical anymore. I think the way to think about it is it's scarcity economics.
Yeah.
Right. There's a limited supply of U.S. dollars. There's a limited supply of gold. We see governments that mess that up by just printing their currency into oblivion. So as a transfer of value, as a store of value, currencies only work, traditional currencies, if there's a fixed supply.
Gotcha.
And so if you come at it from that perspective, then Bitcoin doesn't seem that strange. It's just a fixed supply of something that's purely digital.
Without a third-party system that's doing what banks would normally do?
Right.
Or not the same
Well,
kind
in
of
a way, yes, but also what a bank does is keep secrets, and we're avoiding that as well. So I say I'm not doing crap. I put some money into it. I support, but not we're.
Yes.
But
Raine is.
So
yeah.
So the Bitcoin as a valid currency, it comes from that scarcity. The revolutionary technology of blockchain is that we came up with a way to validate transactions without a third party. We have a decentralized network like the internet, just a group of people that are connecting their computers and servers. And because of the cryptography used, 50%, up to 50% of the people in that network could be attackers of different sorts trying to take advantage. And anything up to 50%, it doesn't actually affect the validity of the network. So it's the security protocol.
Why is that? If you were going to explain it to a layman like me.
Sure.
The consensus is the word that
Consensus is the key word. That 51% is the agreement that everyone has software, has the Bitcoin software, and they run that, and they can say, okay, this sequence of transactions is valid.
Yeah.
But the decentralized nature of it is what's hard. And so you could have technology, every company in the world has a database, and there's data that's being stored, like transactions, that's internally valid. But if somebody else said, well, my database has the real data, it's really hard to prove that.
Right.
You can't, when you think about it, anybody could forge data or copy data.
And say the other person's lying.
Yes.
Right.
Yeah. And there's no way to get around that except to go to a trusted third party. And whether we realize it or not, 99% of the internet we're using today, we are trusting a third party, whether it's Facebook or whether it's our bank. We're trusting that they're validating things and that they're not going to do anything shady. Right.
So I could purchase, or I could put $2,000 into my PayPal account, and if tomorrow I clicked into it and it was $1,000, there was almost nothing I could do about it.
Yes.
Yeah. They would just be like, nope, you gave us $1,000. I'm like, no, I swear it was $2,000.
And in the grand scale, like for us, the Federal Reserve, and honestly, most networks of banks in the world are all related to those same people. But on the grand scale, the idea of the central bank was sold to the people, like advertised in the papers, even though it wasn't really a decision that was made by our legislators and representatives as a whole. Yeah. But it was sold as a way to stabilize the economy. We need to put a clamp on this thing, we should come together and have some sort of organizing entity that manages these kinds of things and will smooth out the whole economy. And if you actually look at the data, it had the exact opposite effect. And that is the boom and bust cycle.
Yeah.
And I think it's perfectly normal to expect them to not want a smooth economy because they know what's going to happen before it's going to happen, and they can bet for and against.
Profit for it.
Moves. Sure. Yeah, right. And so in their case, what they do is they just inject money into the economy. That's called inflation, and that's why the value of the dollar goes down, because there's more dollars than there are assets. And so the assets...
Economics 101. That's what every professor will tell you.
They call it inflation, and they say it's advertised in economics as a completely normal aspect of finance. But really, you only need as much money as you actually need. And when you look at the practices of the Federal Reserve, you're getting way more money than you need. And the extra money is being given to the top people. Like when the Federal Reserve drops interest rates to 0%, those are the loans going to the banks underneath the Federal Reserve,
Right.
So you can't go to the bank and buy a house at 0%, but the bank gets the money loaned to them at 0%, and that's not actually how it works, but for the purposes of this discussion, they're getting money super cheap, and they're giving it to you not super cheap.
So they make the money in between as a middleman.
Yeah, and they also have fractional reserve banking, which allows them to inflate the money supply further. Not only can the Federal Reserve print, like create more digital dollars, loan those out for cheap. The bank then takes that money, and then again, it's not actually legal for a bank to loan money. The way money is created is a completely different thing. We'll get into that. I'll do that podcast someday. But they can also loan out 10 times more money than they have on deposit. So
which is another form of this inflationary.
Yeah. And then the money goes out. Someone, buys a house or whatever, and the person who sold the house takes the money, they deposit in the bank, and the bank can loan it out at 10 times what it was. So, and what that does is create the boom and bust cycle, because at some points there's not enough money. The bank, the qualifications to get a loan skyrocket. Interest rates on variable rate interest mortgages, those things skyrocket. People no longer able to loan money, can't start businesses, and it really clamps down on the economy.
Yeah.
And that's when you get your depressions and such. And so,
and even if it could be managed in a centralized way, our system's not transparent.
Yeah.
So no one would know.
We don't know where the money is or how many loans a bank has out.
Does anybody? Does the Federal Reserve have someone who cares about that, or is that just sort of something that happens
You'd
so
have
fast?
to assume that they know, but they've never been audited, so there's no
Right.
way for us to know that.
Either organizations know and have no obligation to make that information public, or the flow of money is so complex that there's no way to
track that.
realistically track it. Yeah, and Bitcoin and most blockchain technologies are based on a public ledger. So by its nature, fundamentally, it's transparent.
Right.
Every transaction that's logged is publicly viewable.
Right. So if I go and I purchase $200 worth of sound equipment from Sampson using Bitcoin, can anyone find that transaction?
They can only find the account the money came from, how much money moved, and where the account went, and where the money went to.
But that's still significantly more transparency than what happens in our current market.
Yeah.
Okay. I could see how that would be really beneficial to money itself not losing value.
I mean, like, if anybody knew what your bank account number was, they
Yeah.
could look at how much money you have.
Really?
Yeah.
Huh. Makes sense, I guess.
Yeah.
Yeah.
But you could also don't have to, you could have a public and a private account. There's no, it's kind of an infinite system in that way. And it is it's cryptographically protected, essentially, in a lot of ways, which is why they call it cryptocurrencies.
Right.
So, I was going to take a stab at the kind of general explanation, because it is hyper technical. I've listened to a lot of podcasts this week too. In fact, Vitalik Buterin talking about lots of stuff. And
Shout that podcast out again.
I actually don't remember the name of the podcast, but I was looking into proof of stake versus proof of work, and we'll just glance at that, because that's high end stuff.
Yeah,
and
I think we should take a step back actually and make sure for our listeners that aren't as savvy with this that we really define Bitcoin and blockchain.
Raine is being a better host than you.
Yeah, that's where I want to go with it. So I thought about it, and my stab at explaining blockchain and Bitcoin in easy example is the idea of a key. So essentially, you have a box on the table,
okay,
and this is the block, right? And inside that block, when you unlock it, you're going to release some money. So you have one key to the box, and there's two locks on the box. The second lock on the box is a key, and you have to guess what that key is. So think of a guy who makes keys, like you go to Home Depot, right? And they got the little grinder thing.
Yeah.
So imagine if you just have a huge stack of blank keys next to you, and you just carve a random key, and then you try it in the lock, and it doesn't work, and you throw that key out. And then you take another key out of the box, and you grind a different shape of a key, and it doesn't work. And you guess, and you guess, and you guess, and you guess. And everyone on the network is trying to guess the key to this box. And when you get it right, you unlock the box, and you're like, look, the money. And in order to get the money, you have to publish your key, and all these nodes on the network, look at your answer, your key, and if they agree that the key works, then
so
they'll
they
say,
also try it out. It also unlocks the box.
Yeah. And they say, okay, I can
you're
verify that it
mining,
works.
Right?
Yeah.
Right. So let's clarify that money. It's not anybody's money. That's actually the money that's being minted.
Yes.
The new money that's being minted.
So that's
it's
how,
not like the Federal Reserve.
Gotcha.
It's new money that is given as a reward to this miner who has the key.
Yeah.
That was going to be my question: is how do you make new bitcoins? How do you make new? Okay.
And then that money has its value from the fact that you can use it as a medium of exchange, the whole purpose of money, but that there's also work, and in this case, that's electricity and processing power of a computer.
In figuring out the key.
Yeah, that backs it up. So a computer put in a bunch of time to figuring out the key to unlock this box. And then the public aspect of it is that you send out the solution to everyone, and everyone who is deemed, a large portion of the network, their job is to look at the transaction, prove that it works, and then say, yes, that works. And then anytime if you want to prove, you want to say, that's my money, you can go to the network and be like, hey, I just want to verify that my key, I'm the one who discovered what key unlocks this box, so the money that was in that box is mine. And so when everyone says, agrees, and actually, do you know what the state of the agreement is? Like how many nodes have to report back that, yes, this is what happened? Like what happens? I've seen like when you move a transaction, it's something like 65 verifications or something is about where it seems to go like, yep, public.
Yeah. So the rule is that the longest chain wins. So if you've done all this work and you add a bunch of transactions, other people can easily verify that that's valid, that you did find the right key. And now your public ledger has one more entry in it. So what that does is if it's valid, everybody else on the network who sees that, they're incentivized to use that as the new ledger.
It's because it's a more secure network because there are more blocks in the chain, or what's the
It's better
incentive?
consensus.
It's how the protocol is written.
Yeah.
That when new transactions get added, it extends the length of the chain or the public ledger, and the longest chain wins. So other nodes, you're asking how do they all agree on this? They don't have to agree, but what happens is if they don't use that longest chain, they're going to start building off on another chain. That's called a hard fork.
Oh, wow.
Yeah, and we'll get into it. There's some very
We'll get
interesting
into that.
stuff with the forks and things.
But
so.
the point is that if Bitcoin or whatever currency has its value, you all want to be using the same Bitcoin. If people don't agree on those transactions as they're being added, then it'll split off. So it's where that majority, that's the consensus process, is that it's very difficult to find that right key to get the reward. But once you do, it's very easy to validate. And so all the nodes on the network validate it. It gets added to the chain, and it becomes the new longest chain, the new public ledger, and then everyone will start using that. And the proof of work, as this process you're describing is called, proof of work as the consensus mechanism that Bitcoin uses and many other cryptocurrencies, proof of work ensures that no one can fake a longer chain. Because it's not just a matter of generating some data with a computer. Every single transaction or block that was added required all this processing power.
And all this consensus building.
And all of the money you had to
Exactly.
put into the hardware to do the work.
Yes.
Right.
So the reason the longest chain wins rule works as a protocol is because you get something that mathematically, cryptographically, nobody could actually generate a chain as long as this.
Right.
In billions of years. So
Gotcha.
you've sort of proven that that's the real chain.
The only way to attack the network is what's called the 51% attack, meaning you have to have 51% of the processing power, and you have to literally manhandle the network into believing your side of the story.
Gotcha. And that takes an amount of processing power I imagine doesn't even exist on the planet at this point.
Well, yeah.
Is it possible? Could 1 billionaire
It is possible,
do that?
but the Bitcoin network is, in terms of power, is something like 2,000 of the smartest computers on the planet.
Okay.
Because that's how it's just such distributed computing power. It's pretty amazing.
And it's building every day. It's getting more consensus and more strength. Interesting. So every cryptocurrency works on this blockchain technology, right?
Yes. Good transition. So the blockchain is the essential, you're mining blocks, and the way you can mine a block, we'll get into, there are a couple different ways of that. But creating this chain of information and consensus is the blockchain.
Gotcha.
So let's do some other example of how you might use a blockchain.
So Bitcoin, I consider Bitcoin a proof of concept. It's a very successful proof of concept. It was the first blockchain technology that actually worked in a distributed fashion, and they applied it to the problem of having a digital currency. And so you can think of Bitcoin as a very simple protocol that's basically just send and receive. That's all you can do with Bitcoin, send and receive. And whenever you send or receive, that's a transaction that's validated through the consensus process that you described.
Ledger.
Yeah. The thing about blockchain is that the technology, the blockchain technology is about consensus. It's about validating transactions in a decentralized way. You can do that with other things besides money. So the first leap to make from Bitcoin to blockchain in a larger sense is to recognize that Bitcoin is a simple language of send and receive, but you can create a blockchain that has other transactions.
Like what?
I just listened to a podcast that was interviewing the founder of Slave Free Trade, which is looking to use the blockchain to create an auditable trail for products to ensure there's no modern slavery involved.
That's going to be hard, but it exists. It's possible. But these days, there are plenty of examples of companies, let's say Hershey's, right, who use a lot of child slavery in the Congo and whatnot to farm cocoa. They'll just come out and say, "Oh, well, we've solved that. Don't worry. Keep buying Hershey bars. They're no longer slave-ridden." And then next month, a new article comes out. Turns out they're totally lying.
Yeah. Well, let's talk about if a product's on this blockchain and we're arguing about whether or not it's made with slave labor, how is that consensus achieved
or verified?
Yeah. So if you imagine each entity in the steps in the supply chain, when they get they get their resources or they contribute their component of the product, and what they're going to do is they would submit a transaction. Instead of it being sending or receiving money, they're just recording. They're just recording on the blockchain, hey, this, I'm contributing a component to this product, and this is where I got my sources.
Is that the business that is utilizing the labor? Is that every laborer? Is that how far down the chain does that verification process go?
Ideally, it would go down the supply chain to distribution down to production.
Even purchase. There's no reason. You as a person, when you bought it, you would submit a transaction and say, "I just picked up this product, and as far as I can tell, there was no slavery involved."
And then also all the other people on nodes would have to agree to that and create consensus that was the right thing, that's true.
So whether it's true or not is going to depend on the person who submitted that on the blockchain, right?
Okay.
People can submit whatever data they want, but the point is it's transparent. It's a lot harder to get away with something when it's not hidden.
And it's you having said that it was this at this time.
Yes.
So if you were lying, they can just go back and be like, "You lied."
Exactly.
Gotcha.
Exactly. So it's auditable. It's creating an audit trail.
That's the point. Okay.
That's another example of blockchain. You can create audit trails. So it's not sending or receiving money, but it's recording data onto the blockchain in a way that nobody can forge and nobody can hide
or edit.
It's transparent and immutable.
Yeah. Because
that's awesome.
You can't we'll go to Amazon or any sort of retailer. I know Walmart's looking at it for purposes of moving their products around, but you have the problem of if a centralized database can fail, whatever hard drive goes bad or something, and you lose all your data. And this advantage is the twofold of when if the hardware goes bad, there's 1,000 other computers out there with a duplicate copy who can offer it as a backup. They're also part of the consensus process, and I just lost the last part of that, but it's this distributed aspect of. Hey, do you agree, and do I agree? Or I just lost my copy. What's your copy? I just got the copy from that guy. Do you agree that his copy is correct? So
back to the 51% consensus. As long as that's achieved, the whole thing can be verified.
Yeah.
Okay.
So a lot of I think what we're probably going to see as far as blockchain technology outside of money, the biggest thing is going to be movement of inventory. And I know that there's a big shipping company internationally that's looking at. You basically would have a product, and the product has a serial number on it, and then every ship has a serial number, every container has a serial number, and every port has a serial number, that kind of thing. So when you receive a product, you'd scan it, and then your computer would report to the network, hey, I just received this product, it was in this container, came on this ship, I'm in this port. And then everyone would be like, okay, no one's arguing with that, we're going to accept that as reality.
And then you release the money to pay for it?
Well, that can be part of it, but that's a two-step thing, and we're going to
Gotcha.
get into that's what Raine works in, is the Ethereum network, and that aspects both data and money. But in Walmart's case, they would just be like, I want to know where my product is, and you would ask the network, and all the nodes would report back with a consensus. it should be right here.
Yeah, or it's in the shipping process on the way to you.
Yeah. And blockchain is a perfect platform for that because no one person controls it and owns it. So it's a great platform for collaborative coordination of information. So like this inventory issue that you're talking about, organizations don't trust each other. We have to trust, or we pay an organization if their job is to safeguard data. But Walmart they have their own central database, and
they're not sharing.
At the end of the day, they're going to trust their data. They're not going to trust someone else's data.
Yeah, and legally that makes sense too, because you're not going to go to court and say, well, their data says. You're going to say, this is what we've attained, and all the liability is going to be on you to prove that you made your stuff proper.
Yeah.
Also, I guess it opens the door to forging, because the only proof of burden is for you to prove that you did your stuff right, rather than there being a larger consensus.
Yeah.
Yes, but if everything's published on the blockchain,
then there's no lying.
It's transparent.
Gotcha.
Yeah, and each entity has an address that makes them identifiable if they so choose. Can be you can be anonymous, or in many of these examples, the organizations or the individuals which would each have an identity. So they could publish whatever information they want, but that's what makes it a protocol. It's not forcing people to do one thing or another, but it's saying, hey, if we all agree to publish this data to a public blockchain and we let people know, what our address is so that they can associate us with that, if we all follow this same protocol, then hey, look, we get transparency and we get the ability to audit any of these things. And we get to do that in a way where we don't particularly have to trust each other or any one organization, as long as people are following the protocol and recording things the same way.
Yeah. And I have a really random example of something I saw for no real reason this week. A guy wanted a thing. He was building a little camper, and he was talking to a guy, and the guy's like, oh, yeah, we have those. And then the guy pretty much failed to produce on the timeline that he was expecting and stuff, and he was suspect of this guy's like, oh yeah, we have those, but he probably didn't. It was one of those things he got the contract, jumped on Amazon and ordered it, so he had to wait for it to show up. Yeah. So in that regard, you're wondering if you can trust this guy. But if his inventory was published publicly on the blockchain, he could say, I have 10 of those, and you could be like, wow, he really does have 10 of those, and you could say, these 10 computers, these 1,000 computers all agree that he has that.
Yeah.
So I'm pretty sure he has that, and it takes the trust out of the interpersonal relationship.
I'm going to purchase it. There's no one who's going to buy it before me. I can sort of claim it there, and we can begin the transaction together.
Yeah,
there's no mistake.
And that's where this idea of trust comes in.
Can you tax people better like that? It would be much harder to avoid taxes if your entire database was public in that sense.
Well, the database is public, but whether or not the idea, it does create this. If you want to publicly be like, this is mine, this is what I have, yes. But this also offers you the exact opposite of hiding behind a number. That's why it's called cryptocurrency, because there are a lot of aspects of untraceability. And I think, as far as I know, Zcash is probably the best option for people who want to be as anonymous as possible as far as when transactions come.
Yes, Zcash is basically an anonymous version of Bitcoin. And because Bitcoin, we would say it's pseudonymous. So any address on the network, we can track it, we can trace it. We know how much money is going in and how much money is going out. We don't necessarily know whose that is. What? Okay. But it's actually, it's easier than you would think to be able to track that down, because all these transactions happen, and then as soon as there's one transaction that links that address to a real world identity, now we know that all those transactions belong to that person. So that's pseudonymous. Gotcha. And Zcash is one of many it's probably the leading cryptocurrency that is attempting to solve this problem of anonymity, true anonymity. And that's inevitable at this point. We're going to have probably a couple different options. Zcash has a particular approach, but anonymity allows selective privacy. So you can.
What are the advantages of that?
That's a little bit beyond my particular expertise. I think it's fascinating. I think it's fascinating imagining what would be possible when it seems like it's all about privacy. And, just like we expect certain forms of privacy in our day-to-day lives and as a basic right, this will allow a new level of privacy
on a consumer level. Because right now, Google can see everything I've ever bought, ever. And they know when my next toilet paper run is going to be, and they know when I'm out of pencils, and I don't know about that one. But they've got search optimizations.
I just imagine Google emailing you and being like, you haven't owned a pencil for like 6 months.
Yeah, I know. It's been a couple of years. But yeah, that is kind of weird. And also that data has value, I think, is maybe part of the concern around anonymity,
Yes,
right?
yes.
That like, that's mine. Whether if I choose to buy something and there's data that can be mined that I bought it and it's going to help advertisers, I should get paid
Yes.
for that because I generated it. I was the creator of that labor.
Yeah, companies are profiting off of our data.
Yeah.
And that was never really, it just kind of happened that way.
Yeah.
Now we're finding ourselves in the situation where in order to use Facebook and use that service and enjoy that service, we're giving away a lot that, could it's something of value.
Yeah.
Billions of dollars of data.
And on that note, actually, I saw today that Facebook and Google advertising revenue is greater than all other advertising revenue in the world combined.
Of course it is. Of course it is, because also it's not the terrible internet advertising that exists everywhere else.
Yeah, and so that's a great transition because the guy who invented JavaScript, which is what Ethereum runs on, we'll get to Ethereum,
Okay, cool.
and Mozilla, Firefox, the whole kind of like open source aspect of the internet, he is doing the basic attention token, which is an attempt to solve the advertising problem on the internet. I don't know, have you looked into basic attention token at all?
Yes, yeah.
I meant to read the white paper and I totally didn't. I failed at that.
The white paper?
There's too many white papers.
That's what
I
you
can't read
call
them all either.
when the development team puts out basically a very technical aspect of how it works and what they're trying to achieve.
Yeah, I'm sure that would be useless to me.
It's kind of like attempted a peer-reviewed article, like in science.
Yeah.
But
I've read those, and they're a whole other language.
Yeah. The big fact there is the estimate is that the average person is paying like $24 a month in bandwidth cost to just get the advertising into their eyeballs.
I wonder how much are we generating in revenue per person? Like
What is the value of a person?
I can't remember it, but there's numbers out there. Like Facebook makes something like $20 for each person that signs up, just in terms of the advertising.
whole network. Yeah. Interesting.
Like $20 sign up fee or $20 a month in general revenue stream.
I can't remember the exact.
It's hard to imagine it not being.
Yeah.
well, I mean, they're a multi-billion-dollar company. It must be quite a bit.
Yeah. But you also, companies and how they're valued and stuff in the stock market.
It's all perceived. And,
Which is another, actually, let's use that as a transition. So one of the most interesting aspects of cryptocurrencies, and Ethereum has this built in, so we'll go from this to Ethereum, and the most interesting aspect of cryptocurrencies for me is the idea to issue a coin as a company instead of a stock. So you can say, I want to do this, and I would like you to support the company that I'm starting up. So I'm going to issue a coin, and in this case called initial coin offering, ICO, instead of an ISO, which is initial stock offering.
Yeah, like the stock market.
Yeah, so you can get outside of the stock market, which may or may not have some sort of issue. I don't know, like maybe you probably have to buy in to be a member. There's all kinds of rules.
Either way, you're turning your legal equity into something that can be traded.
Yeah. But you're doing it in a network which has no real ties to like a legal organization or taxing, like there's whole freedom aspect to it. So you can say, I'm going to offer a coin that is a representative value of my company, and you owning that coin, the value of that coin will go up just like a stock option with the value of my company.
Or down.
Yeah.
So I'll clarify something here.
Please.
These coins that are issued as ICOs, they're not associated with the company. They're not tied. They represent
so they aren't equity.
They represent zero equity.
What?
There's no equity. These tokens are created with some utility. They have some utility, and they're promising that the product that company is creating is going to use this token, and that token will be an integral part of it, and people will need to have that token in order to utilize the product.
So does that mean that people are going to have to buy that product with that token?
That's
not necessarily.
That potential
They'll
could
have
exist.
they'll have to have some of that token in order to use the product.
Okay.
Whether they
So if you don't have any buy-in to the token, you can't participate in the trade of that product or something like that.
Can you? Sorry, I should finish his question first.
It's built into the product, like
the transactionary nature of it, or
what's an example? if you're a solar power blockchain startup and you're saying, hey, install these solar panels and they'll generate tokens that in proportion to the amount of surplus energy that you generate, and then you can sell those tokens to your neighbors. It's an easy way to sell your surplus power.
So it gets back to the concept that value is not a real thing. It's something, in a sense, it's a perceived consensus, which as it rises and as more people gain consensus that it has value, it actually increases in value because that's part of what it is. That's incredibly trippy.
Yeah.
Okay, really quickly to step back 10 steps. Let's say 30 years from now, every company issues these coins and we're all trading in cryptocurrency. Is the understanding of the more nuanced parts of this required or important to consumers taking part? Like, you're going to have to understand some of this, right?
Well, you have to have an understanding so much, though, that you could produce this podcast yourself in order to engage in it? No, not at all.
Okay, all right, good.
It's utilitarian. You could never know a thing about it, and it would just work.
Be a currency like dollar bills.
I agree with Sampson.
Yeah.
Okay,
you
that's
don't need
important.
to know how HTTPS works in order to use the web.
The web.
Yes.
Very good. Yeah,
Yes.
you don't have to know how HTML works to see a website.
Yeah. Now there are going to be important consumer applications of cryptocurrencies, but I think it's a mistake. A lot of people make the mistake of focusing too much on the consumer application. Like, this is an infrastructure level change to our economy. So when someone looks at Bitcoin or these other things and says, well, I can't use that to buy a burger at my local restaurant. I don't see the use of it. That's a narrow way to look at it. There are going to be consumer applications. There's plenty of apps that are trying to do that. Bitcoin has made the most headway in terms of actual consumer use. I have a credit card that debits from my Bitcoin account, so I can buy things with Bitcoin. That's pretty great. But there's a lot of other applications that are going to be hidden to the average user, but it's going to benefit the average consumer. Right? Being able to use applications or use products that, for example, Arcade City. It's like Uber without Uber.
Yeah.
Right? It's just rider to driver.
No middleman.
What an interesting name for that service.
Arcade City.
Yeah.
Why?
Speaking of, what does driving a car have to do with an arcade?
I don't know.
See?
That is interesting.
I mean, that's fine, but
generally can cut all the middlemen out, though, right? This blockchain technology has the potential to make consumers and producers have a direct link.
Yes. Yeah. If there's anything that you remember about what the benefit of blockchain is, it's what we call it disintermediation.
Disintermediation. Get that middleman out of there.
And the one I am most excited, being a political guy, the most exciting thing for me is removing the middleman of government, which ironically is the government.
Yeah, that's the whole purpose.
Yeah. And again, this is something I'd like to voice because I think it's a mistake that people make around this, but it's not an either or. It's not like, old world, old economy versus this Bitcoin. We're already seeing banks are more invested in blockchain than anybody else.
Really?
They're investing in this and they're going to be utilizing this technology. So
just because it's easier to track, or why?
It gives them advantages for having transparency within their private consortium of different groups where money is moving around. It's much easier to move money or Bitcoin around than to do electronic, wire transfers, things like that.
And there's all different kinds of currencies, and you have to exchange rates. And
You could have like an internal transfer structure in your bank using the internet, and they would pull you off of the Bank of International Settlements, who's probably charging fees and things. Like, you could do things internally for practically free that are not available
normally
to you now.
getting feed for.
If you think of the public chain of knowing what's going on and when and stuff, you might run a bank that has quite a few branches, and you're worried about one of your managers who's stealing from you. And the blockchain technology could be offered to you as a way of preventing.
To audit that.
Yeah, you could be like, hey, man, I know you're suffering a lot of theft in your company, and this is going to solve that problem.
Yeah, and my point to people is to recognize that it's not one or the other, and I have a lot of political aspirations, economic aspirations, that we have a system that works for people more than works for corporations.
Yeah.
Many of us share that dream. my opinion is that if banks adopt this technology, that's not a bad thing either. That's reform. So if we get reform instead of revolution, that's still pretty good.
Yeah.
It's going to reform a lot of practices. We're going to be paying less to all the middlemen. And I think that's still a really good thing.
It's a huge deal.
Yeah.
I would even say just the social awareness that is an issue, that people will realize, like, hold on a second, getting charged interest on my loans is all of their profit and really hurts me as a consumer, and probably hurts the overall flow of money, I'd assume, because the more each individual middleman is taking, the less money can flow all over the place, right?
Yeah, and instead of having to go to a bank to get a loan, you could go to a loan marketplace that's completely decentralized. And so it opens it up. It enables that decentralization process, means that there aren't just a few entities holding that power, that anybody can enter the market.
Okay, that makes sense. I've got kind of a weird question. I hope this isn't too off track. Would you still have a kind of a credit score if you had, let's say we had a Bitcoin loan operation?
I was actually thinking about this the other day. The credit companies is a really good thing. I can imagine being replaced by blockchain technology. Because you could have a bunch of people verifying how good you are at commerce,
Right. It wouldn't have to be this very specific.
And you could also have something where if you wanted a loan, you and a bunch of people could go to a pool, like some sort of cryptocurrency pool that's been created by another person using blockchain, and you make your little, kind of like, think of it like Kickstarter, and then people get to vote with their coin as to who gets the money. And you might say, I am willing to donate to any of these potential loans, but this is the one I vote for first. But if your vote doesn't win the vote, your money would still go to someone who...
To the investment fund kind of concept.
Yeah, so you'd be like, these are all the people I'm willing to invest in. This is the one I prefer, but I lost the preferred vote, but one of the people I'm willing to invest in did win, and they get my money, and like you could get a return on your money, and all that can be organized in any fashion you could possibly imagine.
And
being human is complicated.
The beauty of your ideation, your brainstorming, is that we have something that's programmable. So all these ideas you're talking about, it wasn't really possible with fiat currency, right? We have currency that we can program now, right? We can, all these transfers, because it's all digital, we can actually program,
give them protocols
and software that carries out, that executes certain transactions and loans or whatever it might be. So all, when we're coming up with these ideas about, we could do this and we could do that, we can program that in and create what's called a smart contract that handles that exchange in an automated fashion. And that's part of what all the middlemen are doing for us right now, is they're handling all the paperwork and handling all of the legal process
if it goes wrong and all
to do all of these things. And so we have programmable money now.
So excellent transition. The first one to do that is Ethereum. Which is what Raine works with.
Right.
So where Bitcoin was just the money and the verification that the money, where the money is and who it went to and where those things. Now with Ethereum and the smart contract, and it was interesting, I was listening to Vitaly the other day, and he was saying that now, as far as it's come, he regrets using the word contract because it doesn't quite fit the bill, which I thought was interesting. But nonetheless, he built in a programming language. So not only is the money transfer, you can have a verification process and an order of steps and things that can be executed by the network, but it doesn't require any human. So if I wanted to transfer you money, but I required a few things for you to do first, I could create a contract and run it on the network so everyone can see that as soon as you've done this, and as soon as you've done that, and as soon as you've done this other thing,
the money
which is
released.
Verified by the network, then the money automatically gets transferred to you.
Gotcha. And there's no way on the consumer side of it, on the purchaser side of it, to take that money back once it's in the contract.
Yeah, you can.
Yeah, that's so tight.
It adds this whole trust aspect. So, and this is one of the things. Give me a really basic example of a smart contract, something that would really hit home for most people. A use.
An easy example is an escrow account where you need to have there's a third party that is holding funds, and then based on a certain condition, those funds are released. Those funds are released back to a certain individual. With Ethereum, it's simple. It's trivial to write an escrow contract. In fiat currency, escrow would involve a bunch of papers getting signed and
All these middlemen.
and then if someone steals the money or doesn't disperse the money in the way specified, then you bring in the legal system.
Yeah.
When you have programmable money, you don't need to do all of that.
You don't even need a legal system to reprimand people.
You don't, because it's not possible to
So tight.
steal or do these things. You code the allowable actions into the system.
Gotcha.
Yeah, I see you're getting excited.
I am excited.
Okay, well, let's
Love it.
tell everyone about the project you just wrote on Ethereum.
Sure. So I'm a developer for cryptocurrency products.
So exactly like what you're talking about, you program these kinds of contracts.
Yes, that's right.
Cool.
Yeah, so I write smart contracts. And there's Ethereum is the platform that I build products on. So
Gotcha.
Vitalik and some other very smart folks wrote the software for that platform, just like someone wrote Bitcoin. So now we have this decentralized platform. And with Ethereum, Ethereum allows us to write these smart contracts. So I develop smart contracts that creates this products that can utilize the different transactions that might be recorded on the blockchain. And you mentioned you're interested in gas, and I don't know if I'll have time to go into the mechanics of Ethereum, but just high level, we'll recognize that Ethereum secures its blockchain with proof of work, just like Bitcoin.
Gotcha.
But instead of sending and receiving money, Ethereum is validating any possible variable or change in state. It's just a global state, and you have access to part of that state, and you could say, okay, I'm going to increase this variable here and decrease that there, and it's generic enough that it actually serves as a programming environment.
Beautiful.
So most people know that computers work with ones and zeros, and we don't know how that happens, but people understand the concept that if you make something generic enough, and you have basic operations, then you can build more complex things. You can build anything from that. So Ethereum is basic enough and generic enough that you can write any smart contracts you want. It's actually a programming environment on the blockchain. And so the product that was announced fairly recently from Shapeshift is called Prism. And Prism is basically allows consumers to create portfolios of cryptocurrencies. So if someone wants to own a bunch of cryptocurrencies, a little Bitcoin, a little Litecoin, a little of this gives them a way to do that with a smart contract. So instead of trusting anybody with their money, they can actually put their money into a smart contract, and that smart contract ensures the security of it and monitors price feeds for each of the coins variables. And says, your portfolio is worth this much right now. And all you need to make that happen is a buyer and a seller. So gotcha. I over the last year, I built the smart contracts initially on my own and doing the architecture for it. And then, of course, we have a whole team now. And it was just announced a few weeks ago. We're in a closed beta. And it's really, obviously I'm biased, but it's really an exciting product. We have a lot of people in line for it because it's the first decentralized cryptocurrency portfolio.
Awesome. And the real world example of that you could think of is like a mutual fund where you have, instead of exposing yourself to the risk of one company you're invested in failing, you have a bunch of companies that you're invested in. If any one of those companies failed, you still have all the other companies holding it up. And in this case, you do it in cryptocurrency, and the middleman who's being removed is your financial advisor.
Yes. And it's
right.
being replaced by the whole public ledger.
Yeah, and if you want to talk, say you're like me, I'm really sold on cryptocurrencies in general, and people are like, well, it just seems like such an unstable thing. And I'm like, well, if you wanted to, instead of just buying one, you could invest into like kind of the whole field, and there's no reason to think that this technology is going away, but it is very possible to think that the current front runner won't be the front runner.
Yeah.
And in digital world, that could happen overnight in a lot of ways. So it really is a good idea to be widely invested in the whole field rather than any one or two or three.
Yeah, the challenge that consumers face with this is that all of these different cryptocurrencies require their own software. So it might be pretty simple to download a Bitcoin wallet, which serves as your account, and you can store Bitcoin there. But what if you wanted to invest or just have 10 different currencies on hand? You would have to buy 10 different pieces of software. And the solution that people are widely using right now is to just use an exchange. There's a centralized exchange, and you can just put Bitcoin or put dollars on there, and then you can trade that for whatever currencies you want. And that's great, but that's a company that you're trusting your money with, just like a bank. Or so. And we've known about some pretty big failures, like Mt. Gox,
Right.
Where they get hacked or something happens.
Yeah.
So we're trusting with the exchange. There's a lot of trust happening. It's not secure. And what we're doing with Prism is saying, well, it's natural that people want to hold multiple digital assets, and wouldn't it be great if we could do that in a decentralized way that didn't require anybody's trust? And so you pay Shapeshift a small percentage as a maintenance fee, but you control that smart contract. And even if Shapeshift went out of business or was hacked,
The program
smart
still
contract is going to continue. It's going to execute the remainder of your portfolio, and you can sell at any time, and the money's still there because it's being held there. You can see it transparently on the blockchain. It's not like having your money in your account on PayPal and not knowing whether you can actually get that out.
So I've got one question that is the only thing I could possibly think of that would possibly shed some doubt on anything, is that then it's on the program, right? The program could be flawed.
Yes, the program could be flawed.
This is great.
But the program is on a public blockchain, so you can hire a programmer or hire an auditor to
Audit even the program.
to audit the program itself.
Gotcha.
Yeah, that's part of the advantage of it. It's open source.
Gotcha.
So you can actually look at the source code itself and say, wow, yeah, when I buy this portfolio, this is where my money goes, and this is the code that runs to ensure it works the way I'm expecting. Banks, can you do that with banks? I mean, hey, I'm really wondering what code you have that runs that handles the wire transfer.
Yeah.
It's a completely different world.
Yeah, or like, I put $3,000 in the bank, and I know my $3,000 isn't sitting in an account. They're using all this money all the time. So, but it would be almost impossible to say, like, what are you doing with my money? Their answer would kind of be like, a lot.
Yeah, they're doing all sorts of things with it, and there's a range of how much people are willing to trust banks and governments and central authorities. I'm a bit more conservative with it. I'm okay with these organizations in a lot of ways. I just come back to the fact that we're paying them a lot to fulfill these things. It's realistically right now. Political climate notwithstanding, we generally believe that we can withdraw our money from the bank.
But the truth is, there's no guarantee.
There is no guarantee. So people are going to fall on a range as to how much they're willing to trust banks. I would say there's a reasonable amount of trust right now. I'm confident that I can put my money in a bank, and right now it's probably safe. But the question is, how much am I paying for that safety?
Yeah.
And how much friction is there? I mean, really, 3 days to clear a check.
Yeah, that is a lot.
In this day and age with the internet, that it doesn't make sense. So I don't so much mind these trusted entities if they're audited and there's a process of checks and balances. I think it's possible to trust entities like this.
But they're multi-billion-dollar entities, so they're not just like, oh, we'll charge you a little fee. They're making a lot of money.
They're making a lot of money, and we're paying a lot for that trust.
Yeah.
And before this point, we didn't have the technology to do something different. So the blockchain is the technology that allows a different system.
When did the blockchain start? When did this all start?
With Bitcoin.
Yeah,
right?
you want to speak to
When was
Sampson?
that? Just curious.
I don't have that date off the top of my head. It wasn't that long ago. The interesting thing is that it was created by an anonymous person who basically just used a fake name, and they just released the technology into the wild. They don't technically own it.
Okay.
Bitcoin was created in 2008, 2009. And
That is not long ago.
Ethereum was created in 2013, 2014. So we're looking at, and these are some of the more established cryptocurrencies. So yeah, it brings attention to the fact that this whole space is brand new. It's so cutting edge.
It's new, but it's solid. It is. It's an awesome idea.
Yeah.
Yeah, that was the discovery of Bitcoin. It was like, this actually works.
Yeah.
We actually have something that holds value. It's digital, but through that, I mean, that was the beauty of what Satoshi did in creating Bitcoin. Is it was that right balance, and now people are theorizing about all sorts of other ways to do consensus. But it took that one person to say, here's a system that has these balances. We're rewarding miners just this amount. We're allowing just this much of another, and it took just those right balances
to create an ecosystem. To
create an ecosystem that was emergent. Right? You couldn't run a simulation very well when what you needed to prove was that we can have a decentralized currency where a large minority of players can be trying to manipulate it and it still works. I mean, that's hard to simulate. So it was an experiment, and Bitcoin was a rather successful experiment. And now the sky's the limit.
That's great. That's exciting.
So I did want to. There was one little thing with the potential of a bad program running in this network. The other interesting thing about it is the concept of gas. So every line of code has a little bit of cost to it. So when you think of like the blue screen of death, your computer locking up, the way you are avoiding that on the network is that it's going to be like, okay, I'm going to run this next line of code, and it might be stuck in an infinite loop. But when it goes to run the next line of code, it says, is there any money left in the account? Because when you put this program out into the ether, out into the net to run on all these computers, you're also depositing a little bit of money to run the program. Yes. And when that program runs out of money, it stops running the program. So you eliminate the possibility of infinite loops and blue screens in that regard.
Yep, good. Exactly. With Bitcoin, you could potentially spam the network by sending thousands of transactions for tiny amounts. But there's a fee. Right? You have to pay a small fee, and it's small, but it's big enough. Well, it's not so small these days, but ideally it's a small fee, but it's big enough to make it not worth it. Right? It's not worth it to spam the network. Mm-hmm. And Ethereum had a similar but a little more complex problem in that if we're allowing smart contracts to be written so that it's not just send, receive, but it's, do X, Y, Z, anything, we need a way to prevent someone from putting a smart contract on the network that just creates an infinite loop. And so gas is the fuel. Gas isn't a token, but it's a unit of measurement. And it's a way to measure how much processing power is needed to run a smart contract.
Okay, that makes sense.
And so you pay in Ether. That is the token of the Ethereum network is Ether.
I love that.
So you pay Ether to run these contracts, and it ensures that no contract can just take over and spam the network.
Because it'll run out of gas.
It'll just run out of gas.
Gotcha.
Yeah.
And using my original example of a locked box and the key, and you have to guess the shape of the key in order to unlock the box, and everyone verifies that you have the key that unlocks that specific box. Ethereum is that same story, but now the box is like a little robotic box. Mm-hmm. And when you unlock the box, it can either give you the Ether token, like you can earn token by unlocking the box, or you can make the little box do something like send an email or release a key that unlocks a different box that has something else inside of it. So it adds this robotic little box aspect.
Okay, I've got another question.
Yeah.
I know we're running pretty close out of time.
I don't think we are, actually.
Well, you started it at 3 o'clock, didn't you?
I thought we started at 2:30. Wow. I'm bad at reading time.
No,
all right,
okay.
So we're almost out of here.
It happened fast, but no, I've got a final question. Let's see if I can remember it. It's can you overmine something like this? Like, what's the protocol to prevent overmining, or what you might call overinflation?
We'll finish
hyperinflation.
That's a good thing to finish with. So that's the whole idea of work. It's expensive to mine. So the only way to mine is to have the hardware.
So that's what you were talking about before, about the right balance of mining. Okay.
Yeah. I'm trying to think if there's another way to explain like whether or not you can do too much. But right now you have to have.
It's so hard to find that key that's not a problem.
Gotcha.
It's and you can adjust the difficulty level. That's because it's a cryptographic problem, right? It's you have this key that you've created that's hard to find, but because it's digital, you can adjust how hard it is to find.
Who could adjust it?
That's consensus as well.
Oh, okay.
So it's built into the application that if it gets too easy, the difficulty automatically goes up.
Okay.
And you can use that to adjust how fast transactions can be processed.
That makes sense.
And so Bitcoin, every 10 minutes on average, is how often someone can discover one of these keys.
Yeah.
Could you get crazy lucky? Like, could it happen? I know it takes an insane amount of processing power, but we're still just talking about random codes and whatnot, right? You could get super lucky, couldn't you?
You could. I mean, that gets
I'm
into
just curious,
cryptography,
yeah.
and it's like, you could get lucky guessing someone's password that's
Or
15
buying
digits
lottery
long.
tickets.
Like, yeah.
Okay. Well, that's awesome.
And it's going to be super rare. I mean, there are way more guesses to be had than there are people guessing on the network. So it's not like any one person's going to get lucky for every block. It's like one person might get lucky every couple of weeks or something. And those numbers are out of the air. So I'm just guessing.
So if we're getting close to the end here, just maybe some thoughts to leave our listeners with.
Yeah.
Some high level perspectives on this. So, I want to emphasize that this is revolutionary technology. Mm-hmm. I didn't get into it till 2015 because I was like, oh, that's nice digital money. It's more than that. So, I want to emphasize that it's a cryptographic breakthrough that allows this decentralized
a total
process.
Infrastructural change.
It is. Yeah. It is. So that's one thing. And recognize that it's more than just currency. Right. So, informally we'll talk about, we refer to coins or cryptocurrencies, but blockchain is a good word to describe this general technology of a decentralized consensus process with a public ledger. And that is going to power so many technologies.
Totally.
Yeah. I'm expecting as much change to the human environment as cell phones as I have offered.
Yeah. I mean, that makes sense because our whole system right now requires a third party to verify all these things happening. And if that didn't exist, it's hard for you to imagine like what America would look like. It would look radically different.
Yes. I mean, that is, in my opinion, it is tackling the problem we have with everything, which is essentially the fee that we're being charged for all of the services.
For breathing.
Our government is extremely inefficient, i.e. it is charging us an extremely large fee to run, and we can solve that problem.
And the more inefficient it is, the more fees it can charge us and the longer it can take.
Yeah. So, all right, let's call it. This has been, I knew this was going to be so much fun.
I loved it.
I hate how fast time goes. For those people out there who thought this was like wildly interesting, I highly recommend you look up the DAO hack, DAO, Decentralized Autonomous Organization. That was like that was the first major failure of Ethereum, but it was actually a subcategory. It wasn't actually a problem with the currency and infrastructure. It was a problem with the person who was using the programming language. But that's a really interesting little drama. I was involved in the Mt. Gox hack, which was the major first crash of Bitcoin. So there's a whole bunch of stuff out there you can go and look up and read into, and I highly recommend you do. So this has been Nothing Explained. I've been joined by Ryan Fu as usual. Thank you very much.
Hey there.
Asking amazing questions as expected. Raine, the beautiful Raine, thank you very much for being here and giving us a real perspective on this. So we'll see you next week, guys. Thank you very much for tuning in.